Hey everybody, welcome to the KE Report and a daily editorial on Monday, June 2nd, chatting precious metals with Craig Hemke, founder and editor of TF Metals Report. And it is a very good day for the precious metals sector again, with gold up about $83, silver up over $1.60 right now, a 5% move in the silver futures market, a little below $35 level. Gold is about 3,400 right now. And one thing that really stands out to me is how strong some of these majors are moving off of high volume. We even see GDX right now up almost 6%, again on very strong volume. So, Craig, we're starting off this week, we're starting off this month very good in precious metals, and that's even with the other markets kind of trending sideways, at least US equity markets. It just seems like investors are really coming into the sector stronger and stronger. And as we've talked about, this is clearly a bull market and one of the strongest bull markets I've seen in over a decade. So, Craig, your takeaway, I guess, from how we're starting the month of June in the precious metals.
Well, hi guys. Yeah, it's been a couple of weeks. It was your Monday holiday in May 2 weeks ago, and ours down here south of the border last Monday. So it's been 3 weeks, and it's been an interesting 3 weeks. No doubt about that. I had, I kind of felt like this was coming. I remember we spoke some at least 3 weeks ago, 4 weeks ago about this notion that was put out there about how gold was so overbought and the trade had gotten so crowded, mainly put forth by people that I don't know if they were trying to talk something into existence or maybe they're hoping for a pullback because there's nothing really other than maybe the very long-term RSI's relative strength index. There wasn't a whole lot screaming overbought, that sort of thing. So anyway, I started thinking a couple weeks ago what would really surprise everybody would be a summer rally, right? Because of that whole overbought and overcrowded thing. And so I don't know, 6, 7 days ago, I bought myself a call on some silver and I bought some calls on the GDXJ. And I thought, I think I'm expecting this rally. I'm going to put my money where my mouth is. And I got to tell you, by the middle part of last week, I was like, oh God, what am I? I move too soon. End of the month, all the options expiration, everything else. But now here we are. And I'm feeling pretty good about this potential summer rally. And I think one of the things that we'll really want to watch as we try to measure the degree to how far the metals themselves could move is, of course, the dollar index. It's in a sustained downtrend. For anybody that can find the chart, if you overlap this year's move in the dollar index with 2017, the first year of the previous Trump administration, it would signal there's a little ways further to go. Down to about maybe September, October is where it bottomed out in 2017. So if we get a weak dollar through the summer, and it's certainly looking like that's a possibility, then there's more legs to this precious metals bull market, regardless of what anybody thinks about, again, the overbought and overcrowded thing. As it relates to the shares, I've been begging people at my site to understand. I mean, there's this mad rush out of the shares about a month ago after the earnings reports. And, gold was falling a little bit and everybody thought, let's get out of here for now. But as we've gotten now deeper in the quarter with only now 4 weeks to go, I think there's a recognition that's happening all at once of people like, yeah, it's going to be another good quarter. All these mining companies are just printing money. They're doing it again here in the second quarter. Now everybody's rushing back in, and that's where you're getting a day like today. So anyway, it's fun. I think there's legs to this. I expect more to come in the weeks ahead, and we'll see if we can have some more good times.
Yeah, Craig, it'd be nice to have some good times after a long time in the desert with not as fun times. But we've had a pretty good run in the precious metal sector, really for more than a year now in a lot of these stocks. But to your point about the earnings, yeah, I think it's going to be hard to ignore that Q2 is going to look better than Q1, which was better than Q4 and better than Q3. So you're seeing a trend of improving margins, improving quarters for a lot of these companies. But even in the last couple weeks, when we haven't been talking as much, that there was some under the surface signals that the juniors were starting to move and that companies were doing financings that were smaller scale companies, and some of the mid tiers weren't pulling back when gold pulled back in the gold space, and some of the senior producers were holding their ground. So there seemed to be an undercurrent of a bid coming into the precious metals equities, even when gold was channeling sideways. Do you take that as kind of a good signal?
Yeah, you know what? You could see that a little bit last week. Silver, the price of silver has been kind of trading in a box for about the last 8 weeks between 32 and 34, and everybody wondering what the heck's going to happen next. But the SILJ, the SILJ ETF, all of a sudden started picking up and posted last week some of the highest closes that it had in over 6 months, going back to November. I was like, well, that's kind of curious. And then now we see what's happening with silver today. So yeah, there's definitely something to that. I mentioned buying some calls 6-7 days ago on the GDXJ because the GDXJ relative to the GDX was looking better. It looked like maybe it was ready to outperform a little bit. So yeah, we've always talked about, the rally in precious metals and the mining shares kind of starts at the top and then worked its way down. You get the big moves in the big producers, and like Agnico is tripled over the last couple of years. So you get those big moves first, and then you start getting the juniors after that, and then the explorers after that. Maybe this is a sign, attention beginning to shift to the junior sector. And one last thing I should have mentioned about silver. Today's rally here on the 2nd really began right at 8 o'clock Eastern, just as the action was shifting to New York, 25 minutes ahead of the COMEX Open. And the important thing that happened today, most recently happened a few months back, end of January. There are a lot of these technical, some people call them CTAs. I just kind of group them all together as algos that trade futures. And they're all programmed, or at least in my opinion or understanding, they take into account technical factors, they take into account what the dollar index is doing on a daily basis, that sort of thing. Well, we've been watching for weeks the 20-day moving average kind of trading right below the 50-day, and both of them kind of going sideways in anticipation that, we get any further move up, that 20-day will kind of drag up through the 50-day. Well, guess what? That happened today. And I think that was kind of factored into the open. All of a sudden, these computers see that, if you get my drift, and it's a technical signal to buy. And it was straight up from just before the COMEX Open and really continued almost through the whole session. So there's that little kind of technical factor driving the demand today too.
Craig, what about the relationship of precious metals to the U.S. markets right now? Because one of the, I guess, inverse correlations that we saw earlier this year were market weakness and strong precious metals, but we have seen some strength in the broad averages in the U.S., but precious metals have also been doing well. Today's a good example where the markets are flat. The S&P, the Dow, NASDAQ, they were down earlier. Now they're all pretty much neutral for the day. But again, there's still this positivity into the safe havens, gold and silver to a lesser extent. But that correlation, even now when U.S. markets are doing well, still seems like precious metals are doing well.
Yeah, and we've always discussed over the years this one universal chart of risk assets, and that's not so much the case today. And what's odd is I had this very disturbing news yesterday out of the Ukraine-Russia war, and that's something that's going to dominate the headlines as this week continues. Normally, that would drive some type of safe haven demand. I mean, you could say, look at what gold's doing. But the dollar index is down, and the bond market in the U.S. is down as well. So, you can't really lay this at the feet of like a safe haven thing either. It's an interesting day. Yeah, I mean, you and I both know Corey can't extrapolate too much about any one day. And so I think at the basis of this today, though, is that falling dollar index helping to push along these computers to buy not only silver, but also gold. And, we're knocking out some pretty key important levels. Not only is gold kind of breaking out of its most recent kind of what we call a bull flag consolidation period. You can see that on the chart. So that's eye-popping. But also silver getting above 34, dragging those moving averages up and stacking them again. The last time that happened, silver continued to rally for another couple dollars over the next couple of weeks. That may very well happen again.
Well, Craig, just to that very point, as we've talked about ad nauseum on here, so goes silver, so goes the precious metals equities. And I think a lot of the response you're seeing in both gold and silver equities today is that silver's putting on its dancing shoes and starting to move higher. Now, everybody knows that the last two times silver's gotten above 35, it was not able to hold it. That was in October of last year and March of this year. But a lot of people are looking at 3 times the charm here. Do you think we're setting up in silver and that people now are anticipating that move above 35, which would set up a quick break to a lot higher levels in silver? Is that what's maybe juicing some of the precious metals equities too, is just the strength in silver?
Well, and to that end, Shad, that's another thing that the three of us have discussed over the years. Silver kind of creates its own momentum. It's like, well, why is silver going up? Because it's going up. Everybody watches it. Not, I shouldn't make, no, everybody watches it, not the right. People that have an interest in trading the precious metals watch it and are waiting for it to pop and waiting for it to go. And as long as it's sitting in a box or declining, there's no reason to be excited about it. What then, though, can happen is it starts to break out and move higher, and everybody recognizes that, and everybody's already programmed to think that, boy, when it gets going, it gets going, and it begins to create its own momentum, starts making, kind of new daily highs, stacking them one after the other, and people are like, damn, I'm missing out. And you get that kind of FOMO trade going, and it, like I said, it kind of creates this momentum itself. That's what happened in 2011 is the most recent, really glaring, big time example because silver was trading near $20 in January of that year. And then all of a sudden it was in the 20s and moving up through 28. And we're like, wow, I'm missing out. And then, before you know it, it's the end of March and it's 38. And people are like, holy cow, we're going back to the old all-time highs. Then by the end of April, it's 48. And it just kind of feeds on itself. It's going up because it's going up. And that's why it's been kind of sitting here, stagnant, going sideways. We watched the gold silver ratio expand over 100 because gold's got a lot of that of its own momentum, but silver doesn't have any, and so there's no it's like inertia in physics, right? An object at rest will remain at rest until a force is applied to it. Well, we need days like this to apply that force to silver and hopefully start stacking a whole series of good days in a row.
Man, oh man, it's still a strong market out there, and you are right. Silver keeps moving. I still want to see these majors move, though, and get even more big money into the sector so that more of that money can trickle down when it does trickle down even more. Craig, what about the COT reports? As you said, it's been 3 weeks since we last chatted. Any major changes you're seeing?
Dude, let me tell you, this is all part of what I've been talking about. I think all of us, it's still such a small group of people that watch the sector, right? We like to think that we're prominent or important or something like that. But everybody's in the Mag 7, that if you get a little bone thrown your way on CNBC here in the States, hey, look at gold or look at the gold mine. It's a little very minor part of the discussion. Okay, so we all sit around and when we see gold price go up, we think, well, clearly everybody's long now, right? Gold's up 20% year to date. That's got to be crowded. Unless you actually do the work and you are familiar with how these markets operate and what drives the futures markets. And I'm telling you all this for two reasons. Last week, Friday, as the June contract was going off the board and rolling into August now as the front month, we saw a further exodus of open interest out of gold. In fact, total COMEX gold open interest got down to about 420,000 contracts. And as I speak, you know what? I'm just sitting here thinking, I haven't even looked to see what it finished up on Friday. So why don't we do that? Down another 14,000. So as of Friday, total COMEX gold open interest was 408,000 contracts. Now, somebody out there might go, that's a lot. No, actually, that is hands down the lowest we've seen since the end of February last year. Now, where was price at the end of February last year? It hadn't even broken out above 2,100 yet. You break that down then to the commitment of Treasury report, as you mentioned, Corey. Same thing. We'll just group them all together and call them large speculators, the hedge funds, the institutions, and the like. As of a week ago, I guess now 2 weeks ago, they had their smallest net long position, because they're always net long, but they had their smallest combined net long position since when? The end of February last year. So now that doesn't mean in and of itself that price can't go lower, but it gives you a frame of reference. And again, dispels this whole overcrowded thing. I mean, if we were at the open interest is 700,000 contracts, which it has been before, or the large speculators are net long 350,000 contracts, which they've been before, then you can make the case that like everybody who is going to buy has bought. But that's not where we are. And again, with total open interest, 408,787. I wish I'd looked that up because that may take us back even farther than February of last year to see the last time we had that little amount of total open interest in COMEX gold. Wow, Shad asked me a question. I'm going to consult my spreadsheet and look. And then, Shad, I'll give you that answer as I'm listening to you.
All right, double duty Craig here, listening and researching at the same time, live
Right.
on the show. Um,
Multitasking.
I'm going to make you multitask even more, man, because I want to open it up to even a bigger discussion. You've brought up the dollar selling off, and I want to figure out if there's something on a macroeconomic scale going on here besides what we're talking about in just gold and silver, because copper is up today, platinum is up today, aluminum is up, zinc is up, nickel is up. So the metals complex is up overall. And I thought we were supposed to be having a recession and there was worries about a contraction. Is there something going on in the tariff front? Is there something going on with central banks? Is there something going on where people are getting more bullish on growth because the commodities as a whole are chugging higher even as the dollar sells off?
Well, I don't want to talk about United States and try to extrapolate it to the whole global economy, but the guys down at the Atlanta Fed today upped their Q2 GDP forecast now to like 4%, 4.2% or something for this quarter, which again, I'm the guy expecting a recession this year based on the yield curve uninverting and all that kind of stuff. So this is, taking me by surprise too. But I guess I'm saying this is to, say there is a narrative out there that maybe at least the US economy is a little stronger than thought. Now, some of the other data, softer data, like the purchasing manager indices, the PMIs that we got today, would maybe dispel that. But nonetheless, there's at least some of that kind of stronger economic component to it. There's also, the crude oil market's up today. People worried about what's going on in the Middle East. Copper just has its own extraordinarily strong physical story, as we've been discussing. And we also, last week there was news about one of those Ivanhoe mines in the Congo or something getting flooded with water. It's one of the biggest copper mines in the world. And again, I don't know if it's 1% of the global supply or something like that, but I think you guys have spoken to enough mining execs to know that the number one enemy of every mining company is water in the mine. So there's, I guess why I'm rattling all this stuff off, because there's just this list of things. I don't think we can really relate it to any just one thing. In the end, if we were to relate it to just any one thing, it's that dollar index being down and going back under 99. The lows back in April were 98. The day it bottomed at 98, gold was 3,500. That was the day, same day. So you say, well, another point down the dollar index from here. Maybe gold goes back to 3,500. And then what if it breaks down through 98? And we start looking at 96 as we go through the summer. It's going to be supportive of all commodities. And so that's a big factor too. And lastly, Shad, to answer my own question, open interest in COMEX gold. Again, back before this rally even began on March 1st of 2024, when we finally broke out on a Friday, March 1st, above 2100, broke out on the weekly chart, and 6 weeks later we were 2350. Back then we had about 407,000 contracts of open interest. We bottomed around 407,000 for 4 days, from February 16th to February 22nd of 2024. And like I said, what are we now as of Friday? 408,787. So, the term getting your commitment of traders report washed out and that kind of stuff kind of gets banding around. But if anything, it just shows you there's a lot of room for hedge funds, institutions, small traders, and the like to get excited and come in on the long side. And when they do, you got more buyers and sellers. And when that happens in anything, price usually goes up.
Well, a lot more buyers today for commodities. Who knows if we are seeing a longer term shift into money flowing into commodities broadly. It still has been very much led by precious metals, but hey, even copper has broadly repriced since COVID. That's also higher. Energy, that's been a mixed bag, but hey, precious metals still continuing to really be the standout here and continuing on with this bull market. And as I said, even the stocks, the big guys moving again today. Craig, always great chatting with you. We'll reconnect sooner than 3 weeks for our next call. But in the meantime, everyone can click the link in the show notes to visit your website, TF Metals Report, and follow along with what you are covering. Craig, as always, thanks for your time today.
All the best, guys. Have a great week.